There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Welcome out to the Trading Justice Podcast. My name is Matt Justice, along with my co-host Tim Justice. Just before we get started here, I want to say a big thanks to all those fantastic, loyal listeners out there that have really made the podcast what it is, getting more and more listeners all the time. And ladies and gentlemen, that word of mouth and putting out the good word of trading justice and tackle trading, it's changing lives and kicking ass and making money and everything in between. So we're very happy. And thank you so much. Just want to start out with a big thanks and a shout out to our loyal listeners out there. Tim, how are you doing today?
Yeah, I'm great, actually. I am, first of all, I'm in downtown Salt Lake City, sitting here with one of my students, actually one of our pro members, loyal listeners, Dina. Now that we're recording, give a big shout out to the TJ listeners out there.
Hey, shout out to you.
Yeah, that's it. She's working on her ETF list right now, Matt. You know, I actually got her doing some stuff, yeah. So we're having fun.
What ETFs do you got on the list so far?
Well, the current thing I did was just email her a big master list I keep of about there's probably 100 on there, right, Dina?
86.
You know, and it's after the market on Monday, and so we've got some time right now to kind of go through each one of them and just mark them bull, bear, neutral, and start to organize them a little bit. So there's a lot out there, you know, that we're doing. Yep.
Did you tell Dina I got the inaugural Tackle 25 done today?
I told her, and her homework is as soon as it comes out, is she's going to go through and she's going to chart them and put some alerts on everything.
Now I want Dina to make sure of this, okay? It doesn't mean you enter into every one of them. It means these are ones that are really good from a fundamental perspective, from a technical perspective, from a cash flow dividend. You know, there's a variety of combination that I look for, but it's a list, you know, like, for example, there's a couple overextended ones that I would wait to get into. There's a couple, you know, those types of things. But, you know, I'm still leaning on one or two of the picks, Tim, and help me out if you can help me very quickly just kind of determine if I should keep this on. There's two stocks that I'm not comfortable with from a fundamental analysis perspective, but they're really good cash flow type stocks. Like one's overvalued, but you can get like 5.6% ROI every single month. You know, where do I draw the line between, you know, good cash flow monthly and a piss poor fundamental stock, for example?
Oh, well, defining piss poor could take us an hour. So that's hard. It's you don't want to do anything that you think is most likely going to lose you money. So let's start there. If the chart technicals and fundamentals don't look great and there's too much risk and it's going to end up costing too much to generate the cash flow, it's kind of like the carry trade in Forex, Matt. You can get the best positive interest rate swap in the market. If the trend is moving against that position, it's not a good carry trade, right? Same thing with covered call or a naked put or these cash flow ones. I mean, if the dividend's great, cool, man, let's look at it. But I would need some pretty stable fundamentals underpinning it as well.
Well, technically it was still sound, you know, and I was struggling to find one in this specific sector, and it was kind of the best, so to speak. And I don't want to say piss poor. It's not Chipotle. You know, I mean, it's a lot better than that.
You hate those burritos, don't you? You just hate that company. You bet against, I swear, every week, at least once a week, guys, I hear Matt complaining about Chipotle. So
first of all, okay, I'm going to make a lot of money on Chipotle once the bear market hits. Okay, I'm just going to say that because it is one of the most overvalued stocks in the history of mankind. However, there's no reason a burrito company is $750 stock. I don't get me started with, the liquidity and the, how much shares are out there. And it's just, no, it's a $7 stock. And just like, Yahoo one time went from $120 to $2, and AIG went to $2, and all of these jazz, Chipotle will find itself at a $40 company at some point or another without a split. And I'm just going to throw it out there. We'll see how that one sticks there. Hey, Tim, we got a special guest here, and I know we say that every single time we have a guest on. We got a special guest this week, Tim. But no, we really do, and it's a topic that we all really can't stand doing in the first place. But at the same time, you know what? We really got to kind of make sure that we're all aware of it, and that we're making sure that we're doing it appropriately and in the right capacity, and that is taxes and asset protection. So we're going to take a quick little break. I know it's a podcast. We're going to get Clint on the line, and we're going to start our discussion with Clint Coons from the Anderson Law Group there out of Las Vegas, Nevada. You've been listening to the Trading Justice Podcast presented by Tackle Trading. Go to tackletrading.com to change your financial futures. And I am here with my special guest, Clint Coons. Clint, how are you today?
Hey, I'm doing well. Thank you.
Awesome. Clint, I wanted to bring you on the podcast because I've known you for many, many years now, and you're one of the best damn tax guys in the business from a tax and asset protection perspective. And, quite frankly, understanding taxes from an employee status is a little difficult when we start talking about investors and traders and, all that jazz. It can be even a little bit more hectic. So I just wanted to bring you on to have a quick conversation about some of the things that people need to do to prepare for their 2014 taxes and filing their 2014 taxes and whatnot, and why it's important to take advantage of everything from a trader status to non-trader status to investments and everything else out there as well. So a couple quick questions I have for you, Clint, is first and foremost, what is the primary difference from a tax perspective when you're dealing with traders, investors, and or when you're dealing with some just random standard employment status type relationship?
Well, the primary difference is their ability to deduct certain costs that they incur to propel their trading forward. So whenever an individual would like to take classes or get some education or invest in certain types of tools that will assist their trading, depending on how the IRS will classify them, may or may not make that expense deductible on their 1040.
Okay, and let's take me for example. Okay, I have a C Corp out of Nevada. I have an LLC out of Utah. I'm a trader. I own businesses. The revenues that I generate, okay, how does the tax code see that money that I generate versus somebody from an employee status? Do they see the money differently? Do they see it the same? Is there tax deductions I can take versus somebody else?
So really the IRS breaks you down into two categories for the most part. Actually, there's three. There's investor, there's somebody who's an actual trader in the market, or there's somebody who is a business owner. And if you're investing in the stock market, you definitely want to be either a trader or a business owner, because when you meet those two different criterias, then you're able to write off certain expenses that the investor basically can't write off. And of course, we make it really easy for anybody to be an investor. All you have to do is open up a brokerage account, put some money in it, and start trading. You're automatically an investor. It's kind of like anybody who wants to go into business in this country. It's extremely easy. All you have to do is get a business license and you're in business. But going that route comes at a cost, and that cost is that your deductions will be limited. Your income will be taxed at the highest rate that there is out there. So the best thing for people to do is plan. And the problem that I've seen in 17 years is that so many CPAs, attorneys, they just do not understand traders because they themselves are not traders. And so when it comes to looking at the trader mindset, what the trader is doing from a trading perspective and the costs that they're going to be incurring going forwards, they just don't give them the right advice because their clientele has not been doing that. And they're just used to preparing a Schedule D and going about it like, hey, there are no other options. And I always talk to my clients and say, it's like looking at a box. There's several sides to that box, but if all you've ever worked with is the front side of that box, that's the only side you know, and that's the only advice you're going to give when you're working with somebody who presents a certain problem to you.
So
Well,
when
it's
you're,
interesting. I wanna
go ahead,
jump
Tim.
in here for a sec, Matt. Yeah, no. First of all, Clint, it's great to have you. I'm glad I'm connected here with you guys and chatting. What you're saying there, it really grabs me and pulls me in because I got a story that I think maybe you can connect with. I mentored a young man in 2008 or so. It's been about 7 years ago, and he was in college at the time, and he was going into accounting and specifically tax preparation. And he got an internship after his mentorship. He had become a trader. He knows how to trade. He trades successfully. He files for active trader status. He knows his stuff. He got an internship with one of the biggest accounting firms in Phoenix. And he went down there and he called me and he says, Tim, I'm the intern and I know way more about this than anybody here. And I just laughed and laughed because a lot of, accountants, and they just don't know the trading business, do they?
No, they don't. And it's just like attorneys. If it's not in a law book somewhere, if it's not in a statute or for a CPA, if it's not in the Internal Revenue Code, then they're just not exposed to that particular type of activity. And so they have this real difficult time seeing around the edges and seeing that there are other opportunities out there for their clients so that they can capitalize on the benefits of being a trader or running it as a business. I run into it, like I said, daily.
Is there a difference in the way the tax code sees if you're running it as a business versus running it as a trader status?
Well, see, it's not even the tax code that we're into here. This has all been determined via case law. And it's the thing that people have to realize with the tax code speaks in terms of what you cannot do. It doesn't speak in terms of what you can do. And so many CPAs misinterpret that, or attorneys misinterpret that, and they're always, I would say, negative, and they're being too overly cautious when they're dealing with their clients. When it comes to being a trader, let's take that, for instance, in the stock market. Over the years, there have been numerous cases where the courts have held many individuals do not meet the test of trader status. And so you have to define what is a trader. And really what they look at is, do you support yourself from your trading? That is, do you trade on a regular and continuous basis, that is all year round? Is it your primary source of income? They're going to look at the types of trades you've engaged in. Are you engaging in short-term trades, consistent with somebody who is in and out of the market on a daily basis? And one of the tests we'll typically use is 3 to 5 round-trip trades a day, and a total volume of trades. How many trades did you make throughout the year? I think the number that we're pushing now is 750. It used to be 500, but we've seen, again, the courts looking at individual traders and pushing that number into a higher category. And one thing that's really interesting, or if you want to look at the IRS and their perspective on this, is that they don't want people to classify themselves as traders, because when an individual meets the trader definition, they have the ability to take losses back. That is, if you have a bad year in the stock market, people will tell you, well, great, hope you have a banner year next year so you can offset those losses, because otherwise you're only going to be able to deduct $3,000 a year going forwards against your ordinary income. Whereas traders can pick up those losses and go back. Let's say they had an awesome 2014, but 2015 is not so well. They could take $30,000 in losses from 2015, go back and amend their 14 return and recoup some of those taxes they overpaid in the prior year. So for that reason, the IRS has a financial incentive to avoid individuals classifying themselves as traders. And one of the things that they'll do, let's say you meet all the tests I just laid out for you, but if you use any professionals to assist you in your trading, they could use that against you as well and say, well, you've relied on other people, therefore you're not a trader. And there's this great case out there where an individual actually set up a trading office. He had this casita house, so he set it up as a business office, and he brought in 3 individuals to assist him with his trading. And he paid them a salary. He set up a business, paid him a salary, and said, hey, you're going to handle Forex, you're going to do commodities, and I'm going to do options. And he traded several $1 million, all of his own money, and he had a number of expenses. And at the end of the year, or actually he was audited 5 years later, the IRS said that you're not a trader, and the courts agreed with the service because he had hired people. And it,
even though those people were just working for him, running his
nuts. Yeah.
Oh my goodness.
Yeah, because they said that he relied upon them to make the trades and their advice. Therefore, that is consistent with an investor. So they denied his deductions.
I totally understand what you're saying, but from being a trader myself, I just, how do they categorize hedge funds? I mean, because what is a hedge fund? I mean, they hire people to run their systems. How do they categorize high frequency trading systems, which are dominant in today's marketplace? It just seems so archaic the way they kind of categorize that.
Yeah, what they might say is in those particular cases, what you're dealing with is other people's money, OPM. Okay. You're not using your own money. So that might be a distinction. And, the problem with trader status for me personally is that I think it gives rise to audits, because when you're a trader in the market, all your income's flowing on your Schedule D, but all of your expenses are flowing on your Schedule C. And, the number one schedule that creates the most audits in this country is Schedule C, especially when you see a Schedule C sent in with a 1040 that has no income associated with it, but it has a lot of expenses. So the IRS automatically presumes that you're into some type of activity without a profit motive, so that triggers the audit, because they don't match the income off the Schedule D. They assume that's just investment-related income.
So in your opinion, is it even wise to be trader status if it's going to give a rise to audits in the first place?
I think it's wise to claim trader status. I think it is. I think it's good to do it through an entity. For sure. But the thing here is that you go forwards with knowing where all the landmines are. And if you're comfortable operating that realm, because the one benefit that comes from trader status is the ability to carry the losses back. And I just met with somebody this past weekend at one of our events where they were in this situation. They've been working with a CPA who had not made a mark-to-market election for them. And they were classifying themselves as a trader, but without a mark-to-market election in place, which allows you to take your losses back. And they got hammered in the market. They were just on the wrong side of it last year, and they wanted to carry those losses back to 2013. And I said, well, unfortunately, you can't, because you didn't have the proper election in place. So it's pretty technical. And that's why, for most of the clients we work with, we tell them just, create a business out of it and don't worry about making sure that you have 3 round-trip trades a day, making sure that majority of your positions are all short-term. So there's a different way.
Yeah, I got you. And that doesn't make sense. And speaking about just our normal clients, right, who come in, they're not considered trader status. They might have, another career elsewhere, and they just want to start taking control of their financial future, start taking control of their investments, getting it out of the 401k market, and really start to control their investment positions and whatnot. As a business, they're going to sign up and they're going to start an LLC, an S Corp, a C Corp, or something along those lines. What are the things that those individuals, just your normal average person that we typically deal with, that now has some type of corporation, what should those people really kind of look for when it comes to taxes as they get ready to file their 2014s?
Well, I mean, the benefit of having a business entity to hold your brokerage account is that you no longer have to worry about tracking your trades. So many traders are not aware of the fact that they have to keep track of every single trade that they make, and then all of those trades have to be carried on to their Schedule 40 and listed out. They all have to be itemized. Now, if you're trading in an entity, you're not required to do that. I mean, of course you want to keep track of your trades. You want to know that for your own purposes, internal purposes, but you do not need to share that information with the IRS, because the IRS isn't receiving any information either when it's in a business entity. It is only individuals that they track. So when you're getting ready to prepare your taxes, if you've had a business entity and in the past you've traded in your own account and now you're trading in a business account, you no longer need to go through that process, which I think, again, is another area which would potentially give rise to audit, because your broker could report different information than you're reporting, or the broker or the IRS agent who looks at your return, because I've been through this before personally. I used to trade a lot of options, and it turned into an audit for me because the agent who was assigned my return did not understand options trading and presumed that I owned all the underlying stock and thought I was hiding income somewhere, and I wasn't reporting all the income from the sales. So, had this been in an entity at that time, because when I first started out, I was trading in my own name, I wouldn't have been picked up on.
So are you talking about the actual, hold on real quick, Tim.
That's very Matt,
Yeah, just hold on real quick. I just want to clarify something. So when you're saying trading as a business versus trading as an individual, you're saying the brokerage account has to be set up as the business instead of as the individual, correct? Gotcha.
Correct.
Gotcha. Tim,
That
go
is
ahead.
correct.
Well, what I was going to say is he actually just triggered a memory of mine. I had to deal with the IRS at one point, probably about 10 years ago, because they didn't understand the assignment of an option that turns into a stock, and they couldn't quite figure it out. And I'm sitting here, and I'm a young man, Clint. I don't know how to talk to an IRS agent. I was probably 26 years old, 27 maybe, and they called me, and I had to try to explain it to them. They didn't understand it. I had to get more documentation, and it made me jump through a bunch of hoops just to explain to them how a naked put gets assigned into stock and where that money goes and why it's, it was a mess. And that is something that I've seen not just from my own trading, but from a lot of people. These agents don't necessarily know how to read it.
I know. That's why you should just hook them into this podcast if they have those questions and let them learn it on their own.
That's right. That's right. I never have had to deal with an IRS agent, but I did remember when Tim was going through that, and it was a nightmare trying to explain all the different vehicles and what they are and how, he couldn't show any losses and he's just showing all gains, even if the option had a loss on it. They just don't know. And I also think that's one of the reasons why it's important to get somebody like an Anderson Law where they can really kind of handle all of the business perspective for you as a trader or a business owner. And when you talk about entities, Clint, what specific entities do most traders, investors really kind of focus on?
Well, they typically gravitate towards a corporation, and that's just going to be a C corporation, and it'll be coupled with either a limited liability company or a limited partnership. So a lot of our clientele are creating a business out of their trading. They're doing that because they want certain tax deductions that just aren't available to them. Let's say they want to write off some medical expenses that currently they're phased out for. They can run that through a corporation. They want to write off their education expenses, any type of trade-related expenses that are outside the normal trades themselves for certain feeds. And that can be run through a business, and they can use their trading income to offset that. So it reduces their personal taxable income from their trading. And then you have those that just are looking for asset protection. And so they'll just typically create a limited liability company because they're not so keen on the business aspect of it, but they want to make sure that their trading is protected. So should anything befall them from a liability standpoint, that this money that they're utilizing to create a retirement income for themselves in the future isn't going to be subject to attachment by a potential creditor. And they want to get out of the reporting as well, so they don't have to report each of their trades to the IRS. They can just give them one lump figure at the end of the year.
So pretty much the gambit of everything. Everybody should get incorporated. If you don't, you're asking for some pain down the road.
Absolutely. I mean, here's the thing is that, we talk about going backwards and you can't do that with expenses or losses. I tell people, lock in your expenses now. Make sure you got a business set up. And once that income those expenses are locked in, when you start having some really good trades and some income starts coming in from that, you can start absorbing any of those expenses that you previously were unable to take because the CPA you're working with didn't understand traders and how the tax return should be prepared to maximize those types of expenses.
Gotcha. And when talking about the specific expenses as running a business, a lot of us run our business out of our homes because that's where we do a lot of our trading. What are the standard, deductions that investors, traders can take when they're looking at their 2015 taxes?
Well, I mean, a simple one is how do you place your trades? What are you looking at when you're trading? What are you looking at for your charting? Do you have a 27-inch iMac and 3 other 27-inch monitors hooked up to that? I mean, that would be a deduction right there because that's part of your trading if you're using that computer for trading. So for many people, it's their computer equipment for setting up their trade station. For other people, it would be, they have trading groups, for instance, where they meet with other individuals and they get together and they discuss certain trades that they're getting into or things that they've done in the past. Those meetings can be a deduction. If you're if you're turning your trading into a business, you can be writing off the cost of holding those meetings, the cost of attending them. You could actually rent your house to your own business and take tax-free money out of your corporation in order to hold that meeting if you're doing something like that. That's a strategy we refer to as Section 280A, which if you filled out your own 1040, you'll see that there's a section on your 1040 on Schedule E that asks about that, whether or not you've rented your house out under Section 280A, because that's tax-free income to you. So there's a lot you can write off as a trader. Anything that's business related that you can associate with your trade-related activity becomes a deduction to you.
What about cost of education and learning trading systems? And because we deal with a lot of people who buy classes and mentorships and coaching, and they subscribe to services out there specifically regarding their trading business. Can those be a tax deduction as well?
They can to their business. If they set up a C corporation, they can write them off. And we often tell people, hey, wouldn't you like to get that at 30% off? And they think they need to go back to the provider and ask for that. And I said, no, the reason you're getting it for 30% off is because now you can deduct it. It goes back to the common method that we practice under, which is earned, spend, and then pay tax on whatever is left, rather than earn the money, to have the money tax, and then whatever's left you get to spend. Big difference when it comes to taxation.
If you actually run the numbers on that, if you take two individuals with $100,000, and the first individual does it just the normal traditional way, and the second individual does it through a C corp, they do it from a business perspective, the taxation levels are actually quite astonishing. When it comes to how much the person A is paying in taxes versus how little person B is paying in taxes, even if they make the exact same amount of money, just in terms of how they utilize that and how their corporation is categorized.
Yeah, I mean, I would tell people it's not what you make, it's what you keep at the end of the day that is the most important number. And if I can take you and show you how you're going to have more money left over or more benefit from setting it up in a certain manner, then I think it's pretty obvious the way you should be handling your trading is through a business entity. Because you may only show that you have $50,000 left over in your pocket at the end of the day after you've created your business. But keep in mind, you've been writing things off along the way. That is, you've been taking personal benefits that the individual investor has not been able to receive because he can't write any of that off.
That's amazing. I've been doing this now for about 10, 11 years, Clint. And for the first years, 7, 8 years, I basically just said, you know what, I got an LLC, I'm taken care of, I have different businesses and whatnot. And just in getting to know you guys at the Anderson Law and really kind of just diving in there and having you really kind of handle all of my stuff, not only am I seeing a dramatic difference in the way I'm incorporated, my business entities are incorporated, I'm protected from an asset perspective, but I'm going to tell you right now, it is such a emotional lift. It's this heavy lift that now I don't feel, because now I don't have to worry about the taxes. I don't have to worry about the asset protection perspective. I have professionals out there that are taking care of me from a tax perspective, from an asset protection perspective, and that's just very comforting, because the tax code, businesses, entities, where to establish one, how to set it up, what it all means. Nobody really knows this stuff outside of the people, the professionals that have been doing it for years and years and years. And I just quickly speak to how important it is to have people that are on your team that are that take care of you from a tax perspective, from an asset protection perspective as well.
Well, think of it like a doctor. Let's say you had a heart problem and you went into your general practitioner and you said, doc, my heart's not feeling right. I think I need a pacemaker put in. If he looked at you and said, well, I'm not really up on that, but I could probably try to learn it and put one in, I don't think you're going to go with that doctor. You're going to go to the heart surgeon, the guy that does this day in and day out. Well, when it comes to traders and dealing with business entities and creating those types of structures, that's what our team is. I mean, we have 70 employees between 5 different offices, and there's CPAs and attorneys that work hand in hand to create these structures. And what also makes us unique is that the individuals, the partners of the firm, of Anderson, and many of the employees are traders themselves. So it's not something where we just talk about. It's something that we actually do in our own own individual businesses to ensure that, we're going to have a very comfortable retirement. So we understand where our clients are coming from because we're at their same level. And so that's a completely different conversation than you get with somebody when you walk into their office who's not up on it. They're typically going to be down on it, and they may be talking you out of doing something, or they're going to ask you to educate them on their dime. And that's never a good position to be in.
No, it's not. For years I had my father do my taxes because he's been doing taxes for us since we were 10 years old. And that's just the way how it always was. And probably like many other CPAs out there, and he's a good, honest, hardworking, individual, who just does everything that he feels is in the best interest of his clients and the best interest of you, and so on and so forth. But I do know how he goes about that. And he has this program. He logs into the program, the computer, and he just fills out the program. And that's kind of the how he does it. But from a trader's perspective, from an investor perspective, that's just simply not good enough. And I don't even like to think about the money, like you said, at the end of the day, how much money do you have? The money that I probably would have had if I would have done this correctly from the very beginning instead of just doing it within the last year. And it's just, you learn from your mistakes and whatnot. But I do strongly encourage the listeners out there to seek out Anderson Law Group. And if you guys want to get a special report, the Traders Report, out there at tackletrading.com, on the left-hand side, you're going to see this little black book. It says Trader Status Special Report 2015. Just click that link. You can start reading about what it is to be a trader, an investor, and you can actually fill out the form and get a nice little consultation with Clint or one of those other amazing individuals over there at the Anderson Law Group. During that consultation, very quickly, Clint, and then we'll let you go. What is covered in that consultation that you guys do?
Well, basically what we're going to do is we're going to look at your current situation, and we're going to make targeted recommendations for you based upon, how much you're generating from your trade-related activity, where you intend to take it. We're going to look at the expenses you've incurred to date and find how we can capture those so we can turn what ordinarily you may think or been told is not deductible into deductible expenses. And so at the end of the consultation, we will have designed out for you a plan, a business plan, that you can then take and look at it and move ahead step by step to create this trading structure that we've been discussing today.
That's awesome. And I do believe Tim has a couple questions, Clint. So, Tim?
Yeah, no, I'm loving this, by the way. Thank you, Clint, for your time here today. This is pretty cool. I had a couple of questions. You have a very unique perspective because you get to work with entrepreneurs and business people from probably a lot of different backgrounds in life. What have you seen, being a part of all of these people's power team and helping them out? What are some of the most similar characteristics you see amongst the successful ones out there?
What I found is that the successful people realize there's a difference between high-value activities and low-value activities. And they spend their time on high-value activities. And it's the people that I found are not successful fail to realize that where their time is better spent. And what we've been talking about here is trading versus doing your own taxes or setting up your own business structures. I mean, for a trader, your high-value activity is trading. And that's what you should be spending your time on. You should be having somebody else that does taxes and asset protection handle that aspect, because that's a low value activity for you. You don't make any money out of that. And that's something that I myself, continually have to ask myself when I'm engaging in some type of particular activity, even though I like doing it, is it really worth my time? Because my time is limited. And so I need to always focus on high value activities. And that's what I think is a common theme among successful business owners.
Yeah, and that's what we encounter all the time, quite frankly, as mentors and teachers, is trying to help people build their mindset and say, you need to prioritize, you need to focus in, and become more efficient with your time, develop a routine, develop a schedule. Even here on the Trading Justice podcast, I got to tell you, our producer, Phil, who we interviewed a couple weeks ago, the second we brought him on to start doing some scheduling and production work, our podcasts have gotten better. There's just one anecdotal case to really reiterate what you're talking about there, Clint. Well, Matt, you want to wrap this one up? This has been fun. We'll have to get together again and talk. Yeah,
absolutely.
So you guys are in Las Vegas, but you take clients from all over the place, don't you?
Yeah, absolutely. I mean, most of our clients are outside of Nevada and Washington. So we have 5 offices actually in Las Vegas and 1 office in Tacoma, Washington. So we take them from all over the country.
Hey, Clint, we also have a lot of Rich Dad students that listen to the podcast as well.
Mm-hmm.
And you teach a class called Tax and Asset Protection. And in that class, you basically spend 3 days covering kind of the broad topics we've kind of discussed here. When is your next class, by the way, just in case somebody wants to sign up for it?
With Rich Dad?
Yeah.
Actually, it's going to be next weekend. I'll be in Bethesda next Friday,
Maryland,
Saturday, and Sunday. Yeah.
I've probably been in that hotel that you will be in 3 or 4 times in the last year alone. So I love Maryland, Washington D.C. That area. It's just amazing place to visit and whatnot. And also, if they want to just get in touch with you, you guys do classes on your own as well?
We do. Our next class is actually going to be in San Jose at the first week of March, Monday, Tuesday, and Wednesday. I'm not sure of the date. I think it's maybe the 1st, 2nd, and 3rd or something around that.
And if somebody's interested in attending that class, how do they get in touch with you? How do they find you?
I think the best thing to do, so I can, know where people are coming from, is they can just email me, and my assistant can reach out to them and get them the details to get registered. And my email is ccoons. Is that all right if we give it out?
Oh, of course.
Yeah.
It's ccoons@alglaw.com.
Coons, CCOONS at what was the last again?
alglaw.com.
Awesome. We'll make sure we put that in the written description of it as well.
Hey, Matt, you ready for a?
Let's see what you got this time.
Ready
Tim?
for a drop here, Matt? See if I can take us out. You got it. All right. You've been listening to the Trading Justice podcast with Matt and Tim, and we have our special guest Clint Coons here from the Anderson Law Group. We've been talking about taxes and becoming a more active investor and entrepreneur and really prioritizing your time. If you want to download a free trader status report, visit tackletrading.com. You can locate an icon up on the top left, and that was written by Anderson Law. Clint, did you write that manual?
I did.
Or did somebody over at your firm do it? You wrote that, so we have the author of that manual here, and you can go grab that, and that way that will connect you to Anderson Law directly from Tackle Trading. Clint, thanks for being here.
All right, guys, thank you.
And, we appreciate
Thank you so much.
Take care.
All right, later. All right, Tim, listening to Clint was such a pleasure. I will tell you the one thing, though, that really kind of stood out to me was the fact that, when Clint is talking about just, the whole theme of money, it's not about how much money you make. You can make a lot of money, but if you're not protecting it, if you're not treating it the right way, you don't have a lot at the end of the day. And if you're paying taxes on the money you make, not the money you keep, that there's a big difference in that. And putting somebody like a Clint Coons and the Anderson Law Group on your team, if it can save you money at the end of the day, then why not? I went with them for a reason. They handle my books, they handle my taxes, they handle all of everything I personally do, and I have been as satisfied as I possibly could with the Anderson Law Group, Clint Coons, and all those fine tax attorneys over there. Once again, if you want more information about the Anderson Law Group, on the left-hand side there at www.tackletrading.com, you can just click that trader status book, get a book for free, and start learning how to do it a little bit more appropriately. Tim, what do you take out of the conversation?
Well, the number one thing for me, Matt, because the tax stuff I've been, dealing with and talking about for a long time and trying to get traders to think about getting, mark-to-market deductions, at least understanding it. It's one thing to make a decision that I want to be an investor status and I'm comfortable with it, but most people just by default don't even have the information. And so my challenge is to them, just gather all the information, then you can make a choice,
Yeah, exactly.
Get educated. I think that's a critical thing. But even more important than that, from my takeaway from the conversation, is when Clint was talking about how you need to spend your time on the things that make you money.
Rated M for mature.
No doubt.
Right? I don't know if he said it just like that, but
honestly, Tim, just look at us as we've been building Tackle Trading. We've been trying to do this now. We've been at this for 2 years now, in the research, the development, the back end. And the reason we were at it for 2 years and not to another level where we should be already is because we tried to do so much on our own. And it's not because we were being cheap. It's because we're just, hey, we'll just do it on our own. I got some time. Well, why spend your time on trying to accomplish things you're not efficient at, not effective at, and at the end of the day aren't very good at, when you could go spend your time doing things that you are good at? And so that really rang true to me as well. Just such a wonderful
I do got to jump in on
conversation.
that because I think that you can take that logic to an extreme. You not doing your laundry or cooking food at home because you try to say, well, I make more money having somebody else do it. I don't necessarily agree with that because I think there's a certain part of human development. We have to do stuff like cooking and, like doing yard work and that kind of thing. I know some people they get rid of that. I think what it comes back to, though, is it a business venture? Is it something that you need to have done to move a business forward or an idea forward? Guys, if you're not a website developer and you're starting a company, don't try to build your own website. You might think, well, I got to save that $200. You're going to spend forever to do that. Whatever business we're talking about, if you're a trader and you want to focus on trading, not taxes, hire the Anderson Law Firm. Go through their class, Tax and Asset Protection through Rich Dad Education. Get people on your team that can help do these little things that maybe you're not an expert at, right, Matt?
No, I agree with that, but at the same time, I got no issue hiring somebody to come in and clean my house.
No, I need to do that, actually. I need to do that for Valentine's for my sweet wife. She deserves me to
well.
bring somebody in and clean that sucker out. But
Well,
food, though, Matt, I mean, would you give up cooking? Would you give up cooking? Right?
Cook your own food, grow your own food, do all that. So, shifting topics, Tim, we got 2 new things coming out today at tackletrain.com. We got the latest edition of the Forex Report, and we got the new Tackle 25. I want to talk about the creation of the Tackle 25 list, what it is, and what we're trying to position that as. Tim, kind of explain to the listeners what the Tackle 25 list is.
Well, at Tackle Trading, we know we have a diverse audience. And we basically got people who are interested in building out their portfolios, learning how to trade, learning how to cash flow. And Forex, futures, commodities, ETFs, all of it are going to go into it. And so we thought to ourselves, what would be one of the most useful tools our pro members can have right away? And we all said, let's give them a list of stocks that they can use as a watch list. And so it's a combination of fundamentals, technicals, sector strength, some of our own internal criteria, Matt, that we met as a team about. And it's a watch list for people to start operating from that they can generate ideas from. Now, what it's not is it's not a recommendation to go out and trade all 25. What it is it's a resource you can use to go out and say, okay, these guys are interested in these stocks. Where would my trigger be? How could I play this? It might require some timing, some planning too, because the timing on these stocks, I mean, it's just like any other watch list, Matt. It's going to change.
In creating the Tackle 25, what I really kind of wanted to do was, and you're absolutely right, Tim, in no aspect when I was doing the Tackle 25 was this hey, listen, this is what you're going to do right now to go make some money, because there's stocks on the Tackle 25 list that I wouldn't touch right now, and the reason being is they're just overextended. They've went up too far, and they need to come back down in price before I personally would invest in them on the weekly chart. But it's a watch list that when things are setting up and you're comfortable with the technical analysis behind it, that these stocks, for the most part, are fundamentally strong stocks. And more importantly, Tim, one thing that I have noticed is becoming more and more difficult because there's so many different options, there's so much you have to look into, is finding good quality stocks that you can capture a dividend on, that you can capture, good, what I call this, the cash flow expectation, the CFE. And what the CFE is basically how much you can expect monthly on the issuing of the call options against the stocks you own in the form of covered calls. And so basically I list out dividend payments, cash CFE reports, put charts on there. And, it's a list of 25 different tradable instruments. 24 of them are stock. And then the 25th is just like the 3 basic commodities we like doing in oil and natural gas and silver. It's just a list that we'll update once a month to make sure nothing has changed. Nothing has changed from a technical analysis perspective. But I'm really excited for the list, and mostly more than anything is because sometimes as a trader, as an active trader, we can get so caught up on short-term analysis, day trades, swing trades, all of that jazz, that we fail to keep in mind that one of the most important aspects of our portfolio is not just short-term cash flow, but also in terms of long-term growth, dividends, and whatnot as well. So it's something that I think is going to find a wide audience over there at Tackle Trading.
Oh yeah, I think people are going to like it. I hope they do. I mean, if they don't, we can delete them, right?
Oh, we can definitely delete them. I mean, if my hard work is not going to be respected, I'm not going to put it out there. I'll go make my trades on my own damn time.
I know our students pretty well. I know our team pretty well. I mean, they love any way we can help them get organized or save them time. Matt, I think that's one of our jobs as team leaders, as coaches at Tackle Trading. That's why when you, even in a ball game, you show up to film prep and you hand out the sheets and say, hey guys, these are the formations we're working on this week or something like that, right?
Everything's about your playbook growing, And, I will tell you this, Tim. I've been in this industry a very, very long time in every aspect of the trading financial industry, from developing trading systems to software to mentoring to coaching to on the speaking angle at seminars and whatnot. And in all of my time, I've never really seen something like this where we're putting together a list of fundamentally strong stocks, technically solid stocks, where you can really kind of do the expectation from a dividend, from a cash flow perspective going into it. You've seen fundamentalists out there, like the IBD has a fundamentalist. They don't have anything like this. You see other lists out there, this is a fundamental scoring system, but they don't ever combine both the fundamental analysis, the technical analysis, as well as the cash flow expectation as well. And so it's something that I think is very, very unique to our industry. But I think our team members over there at Tackle Trading, they already know that we if we're not going to do it the best, we're not going to do it.
That's right. And the Tackle 25 is just another thing we're going to start doing, and we'll keep them posted and updated. Some of the processes may change a little bit because whenever you roll out a new product, I think we put it out on Monday this week. Maybe in the future we decide that Wednesdays are better. I don't know. We'll always communicate that to the team if we make any changes, though.
Oh yeah, and I think the product, since it's the first time we did it, I think the product is going to evolve as well. In terms of how much fundamental data I do list, how quickly or not too quickly we make modifications. I also think one of the things I'm going to start doing is not entry points, but maybe also include, okay, let's sell naked puts at this level until it's put to us as well. And so
maybe an ROID number on there, or a ROID minimum or something like that. That'd be cool. Yeah.
Yeah. So we need to get that ROID spreadsheet for the credit spreads out there. But we're, like I always said, we're going to build the best damn trading website out there, best community out there, and we have the best team and the best team members. So if you want to take control of your financial future, if you want to start making some money in the financial markets, if you're sick of your damn job, then do something about it. And that's what we're trying to help you do over there at Tackle.
Yeah, absolutely. Now, you also on Mondays, you do a Forex report. Did that?
Yes.
Do you want to talk about that for a minute?
I do have it. I have not recorded the video for it yet. Now that we've included the Forex report in the Pro subscription, I do both a written version of it as well as a recorded version of it. I do have the written version done. I've sent that to Phil, the producer, to kind of touch up and make it look all sexy and whatnot. I've not done the recorded version. I'll do that after my next meeting. I have a meeting with a couple people here in just a little bit. But you know what? The Forex market, outside of some day trades, go to bed trades, news-based trades, right now it's kind of trying to find a direction. it really doesn't have a strong direction one way or the other. And although there are a couple decent swing trades out there right now, nothing unreal fantastic. And so one thing I did today on the Forex Report is basically list out the economic events we can trade this week, and the different go to bed trades, and obviously I assess all the major currencies as well. And what I found was honestly, the dollar yen pair, nothing to see here. The Swiss franc pair, I'm looking to get into a Swiss franc trade as it goes down past 0.9200. Nothing on the British pound. Looking for a little bit of a deeper retracement on the Canadian one before I do something there. On the euro dollar pair, looking at still in a trade on the euro dollar pair. Got in at the 1.15 range, and starting to go back. I talked about that last week on the Forex Report. And then on the Australian dollar, talked about last week how we needed some degree of retracement, and it's kind of still doing that low base scenario there. I'm actually, unless there's some news coming out on Greece, which who the hell knows, it certainly could any moment of any day come out and say Greece did this or the Europeans did that, or they agreed in one day and disagreed the next day. Not a lot of economic reports this week to really drive the market. Not a lot of Fed action this week to drive the market. I think it's going to be kind of a slow week, a technical week this week. And you know what? Sometimes we just need kind of a slow week in the market. I do expect one of those this week.
Well, what's interesting about the whole Greece thing, Matt, it kind of reminds me of a complaint I hear from people about politicians. And they're like, very common, you'll hear this perspective that, politicians these days, the two parties, they just fight with each other. And, I was hearing about how politics in Greece is just crazy right now. And I think the lack of historical perspective amazes me sometimes. Politics in Greece goes back 3,000 years, and it's always been crazy. So even
since Athens and Sparta couldn't get along, and Macedonia didn't like either one of them. So
right,
nothing
right.
new. Nothing new.
It's not a new thing, but you never know with those storylines. I mean, sometimes a storyline doesn't seem like much, and then it can just grab itself. One question on the Forex Report. You talked about light economic data. Now, there are two U.S. dollar events this week. There's a few Aussie events I'm interested in as well. But the consumer confidence and sentiment numbers later in the week. Talk about those. I mean, how much does this market respond to consumer-driven data?
Well, consumer confidence, and there's two consumer confidence reports. You have the consumer confidence, and then you have the University of Michigan consumer confidence report. So we have two reports really kind of track consumers. Then you have other reports that track consumer spending this week as well. And when you're looking at the consumer confidence, consumers account for about 70% of the GDP numbers out there in the United States. And so when we're looking at the University of Michigan Consumer Confidence Report next week, it's a major report, and it's supposed to come in at 98.2. If it comes in better than 98.2, which means basically the consumers are on hopium right now, which they are. They always are before the bear market hits. But if it comes in above 98.2, the dollar should rally. And if it comes in underneath 98.2, the dollar should decline, because the value of a currency, not always because we live in a different environment than we did 20 years ago, but the value of a currency really should go at the value of the economy. And so if consumers are confident they're going to be spending more, which means the economy is going to go up, going to be better, which means the status of the U.S. dollar should go up. Now, the way we trade that is what we call a news-based trade, and we've talked about those on the podcast before. And there's a lot of videos over there at the website Tackle Trading to help you understand the news-based trade. But really, what it is, it's like most things in life, Tim. I'm not going to explain the trade here because people can watch a video on it, but it's success in life, okay? Not just in trading, success in business, in personal relationships, success in marriage, in friendship, in everything in life. It is about planning and execution. That's all it is. people don't have a happy marriage because they just fall into it. They don't have a happy business because they just all of a sudden one day worked out. It's about planning and execution. You plan it by knowing when when the report comes out. It comes out on Friday at 10 a.m. Eastern Standard Time, and then you just execute the trade around it, which basically means before the event, about 5 minutes, I'm going to place a couple orders above support and resistance to take advantage of the quick movement.
Well, and I think there's another thing in there, Matt, that I would just throw in, and it's probably part of the same thing you're talking about, but also building the right team. Putting the right people on your team to help you execute that plan, right? And to actually get your business to a level it needs to be. None of us can be an expert at everything. It just doesn't exist. So there's always going to be an area where you're going to need some help. And that's where mentors and coaches and teams, come in and help people up over the hump.
Well, that goes back to the dad mindset. What Robert Kiyosaki really kind of instilled in us is the fact that, like our father, for example, our father is a successful business owner, taught us the value of hard work, right? And gave us just an amazing mindset moving forward. But you know what? It is also a limited mindset because it was that of the individual. And it was that of the individual. The way you get success is because you just go out, work everybody. And nobody can do it better than you can. So let's go swing the hammers by ourselves, and let's go hang the sheetrock by ourselves, and let's put the trusses on with our hands because, he has 6 sons and he can spread them out across the wall. That's an amazing mindset in its own right, in the sense that, hey, listen, to get ahead in life, you've got to work your ass off, right? But it's also a limiting mindset in the sense that, what Robert Kiyosaki says is it's not about, going out there and outworking everybody, although he's one of the hardest workers I know as well, going around being as successful as he is, traveling the world, trying to give people an opportunity to take control of their lives. But at the same time, it's about surrounding yourself with other professionals. It's about, surrounding yourself with like-minded individuals that are goal-oriented, that want you to succeed. And, like we talked with Clint today, hire a tax, attorney to help you out in terms of your taxes. Hire these people out. If spending money equates to more money, that or a better life, then why not? So I certainly see both mindsets. But I'm very happy. I both have the hardworking mindset that our father instilled in us, and then the mindset that our rich dad instilled in us as well.
You know what I'm going to do the second we get off this thing, and I mean it. I am finding a house cleaner for Valentine's Day for my wife. I'm sending him over to my house because if spending money makes me a happier person,
yes,
why not?
Yes,
right?
A happy wife is a happy life. But just do me one favor, okay? Okay.
Yeah.
When you hire this said individual, okay, make sure they clean the basement because that's where I stay when I come up.
I sure will. I'll make sure that they clean the basement.
All I'm going to say is a happy business partner, a happy trading partner, a happy brother, happy best friend, however you want to put it, buddy. Okay? Just going to throw it out there.
All right, Matt. All right. Deal. All right. Well, you guys have been listening to the Trading Justice podcast with Matt and Tim. We broadcast from wherever we're at. Sometimes when Matt's on the road, he's out there teaching the good word of what we're trying to do at Tackle Trading and Rich Dad Education out there to students all around the country. We do webinars over, the entire globe, really. We have students from Beijing, Australia, Tokyo, Hong Kong, London, South Africa. I mean, you name it. And it's a real true pleasure to be able to connect with all of you good people. If you listen to the podcast and you like it, please go rate us on iTunes. The more 5-star ratings we get, and I know I'm shamelessly plugging it for us, we want that though. More people listen to it, and then we keep doing more of them, and then we get better guests, and then you guys like it more. So if you enjoy the podcast, take a minute and go rate it on iTunes and give us a 5-star rating.
Yeah,
Matt, any last words?
My only last word is this. When you were mentioning where our students are from, and they're literally from around the globe, every continent, maybe not Antarctica, but, I was just kind of going off on a little nostalgia there. We're from a very small community called Huntington, Utah, Emory County, Utah. And we have had the pleasure in this business to meet people from around the world, have friends from around the world, have business partners from around the world, teach people from around the world. And there's still people that I grew up with that probably don't know anybody outside Huntington, Utah. I just say that's kind of cute, funny, and sarcastic at the same time.
Well, it's interesting though, because I mean, the world is as small or as big as you allow it to be, and same thing with your consciousness, Matt. Your mood, your happiness, your ability to network and develop relationships and understand concepts. It can be as limited or as big as you allow it to be. And I find personally that interactions with diverse and interesting people allow me to grow as a human being. I think doing this podcast, Matt, is a great way for us to grow as human beings, because think of the people we get to interview and talk to. In fact, one thing we should do on a podcast is bring on people that know things about subjects we don't. That'll allow us to learn about some of that stuff. I really enjoyed talking to Clint today, and I would love to bring on all kinds of different people. What was the guy's name we were talking to, who's doing the institutional trading on the back end with the algorithms? It was Andrew's buddy. I just can't remember his name. Dave. I mean, that was awesome. If you guys have not listened to that podcast, go back and listen to it.
That's a fantastic podcast. It's labeled, I don't know what podcast is, but it's labeled Dave Koceric. And that was a good podcast. And just the last thing I'll say is plug in tomorrow's podcast. Tim, we got a good friend, good buddy of us, somebody we kind of grew up in this business we called trading together, Mike Curtis. Mike Curtis was, just to kind of let people understand who he was my financial manager when I was director of Rich Dad Education. And so Mike helped me, kind of establish a lot of what we did at Rich Dad. He also, managed all the coaches and mentors and, all that jazz. So I'm looking forward to reminiscing Al Bundy style with Mike tomorrow. So definitely check out the podcast. Like Tim says, give it a nice 5-star rating there on iTunes, and we will see you next time.
Peace.
You've been listening to the Trading Justice Podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice Podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.